Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start with stocks on Wall Street. Last Friday, for the session, it was a mix. The Dow Jones was up 0.4% with its more traditional blue chips, but the S&P was down a little bit, and the Nasdaq, with its tech shares, off more than 1%. What's the story in the global markets as we start a new week?
Okay, while the Friday's results were mixed, if you look at the whole week, it was pretty much downward. For the week, S&P went down by 1.3%, Dow by 0.3%, and Nasdaq by 3.9%. And that was basically because of a couple of news that was revealed on Tuesday and Wednesday last week. First of all, the U.S. Fed started hinting very strongly that the next interest rate rise that we will see in May may be a big step of 0.5 percentage point. And the person who made this point was Leo Brainard, who it was usually known as the dovest of the Fed doves. So if she's talking about the big step, that means it's very likely that the next rate rise will be such a big step. And then the Fed minutes were published on Wednesday, and the minutes mentioned that they will begin quantitative tightening most likely in May. And quantitative tightening in this case means instead of letting bonds just mature and disappear, the Fed will sell about $95 billion worth of bonds per month, $60 billion worth of Treasury bonds, and $35 billion worth of mortgage-based bonds. You compare that with what happened in 2017, quantitative tightening. The Fed sold about $50 billion worth of bonds per month. So this quantitative tightening, if it goes on as planned, it will proceed twice as quickly, and that will have almost as much of an effect as rate increases. So because of that, the all U.S. indices were down for the week, and the 10-year Treasury yields hit a new 3-year high on Friday, rising above 2.7%, and the yield ended last week at 2.38%. Compare that to the beginning of the year when it was only at 1.63%. A little bit of good news was that oil prices did rise on Friday, but it's settling down around $100 per barrel, $98 for West Texas Intermediate, and about $102 for the Brent. But this week it's going to be pretty rough. The futures for Monday's opening is down for all three indices. Year to date, the S&P is down about 5.9%. Dow is down by about 5.09%. S&P year to date, it's down 6.4%. Nasdaq, it's down by 13.4%. Europe, they are following the American pattern roughly. DAX, CAC, and FTSE, they were down on Tuesday, Wednesday, and Thursday, but up on Friday. These indices started trading about an hour ago, and right now they're all down between 0.2 and 0.9% for today. And then Asia, there's a difference of a degree, but Shanghai and Hang Seng was down since Tuesday, and Nikkei has been down on a downward trend since end of March. Nikkei was down 0.6% today. Shanghai and Hang Seng, they're still trading, but Shanghai was down about 2.6%, and Hang Seng was down about 3.3%.
Well, now today in the Korean market, it was a fairly volatile session into positive territory on the KOSPI this morning, just briefly, then back down. There were declines in healthcare and bio, some gains for financials and automakers. Tell us about the domestic market.
Well, the Korean market seems to be showing that nervousness as well, and foreigners keep leaving the Korean stock market, though they're leaving fairly slowly. Financial Supervisory Service published a report today, and for the last 3 straight months, foreigners had negative net investment. That means on the net, they put money out of the Korean stock market. In March, they took on the net about 4.9 trillion won out of the Korean market. KOSPI It's been on a almost continuous downward trend since last Tuesday. Today, they're down 0.27%. They ended today at 2,693.09. Individuals and institutions bought, foreigners sold. Year to date, they're not down 9.9%. KOSPI, today, they're down 1.38%. It ended today at 921.83. Individuals bought, institutions and foreigners sold. And year to date, they're down by 11.2%.
Well, as you mentioned earlier, Professor, oil prices, they're holding below $100 a barrel, having come down from a high last month above $120. That goes for WTI and Korea's benchmark Dubai crude. Countries, including Korea, have been releasing their oil reserves. What do you see happening with oil prices?
Well, the oil prices have obviously been on a roller coaster this year, starting at $75 per barrel at the beginning of the year, going as high as $123 per barrel in early March, right around the Russian invasion of the Ukraine. And then it's been on a roughly downward path since March 23rd. Currently, the WTI is at $95.92. That's very near the post-Russian invasion low of $95.04, which was on March 16th. There has been some attempts to limit the price rise of oil. The U.S. has been trying to pressure OPEC producers into producing more oil, but that has failed so far. And U.S. shale oil producers are not increasing their production because a lot of them went out of business during the pandemic. But the oil prices seem to be on a downward path for the last 2 weeks because of some fortunate or rather unfortunate events in some cases. First of all, the U.S. has said that they will release 180 million barrels of strategic reserves. International Energy Agency says that they will release about 60 million barrels of oil as well. This is frankly not enough to really counter the price rise effect, but it is apparently having some symbolic effect. And then secondly, U.S. and EU in the second quarter, they typically have lower demand than the first quarter, so that will help lower the oil prices some. And then third, U.S. is negotiating with Iran to loosen their sanctions. If they agree, then uranium production may step up. Fourth, and this is perhaps most important for the price trend, China is in a lockdown, Shanghai and other cities, and that's lowering production not only in China, but it's lowering the possible growth rate for the world as a whole. So that people are expecting that will reduce the demand for oil. That's probably the major factor which is keeping the oil prices from rising up even more than it did. And then fifth, there's U.S. Some worries in the U.S. whether oil companies are gouging their customers. So U.S. oil manufacturers, oil companies are reluctant to raise prices. And then personally, I wonder if there's some speculation as well. There's a lot of excess liquidity in the global financial markets. The central banks have started to raise interest rates, but they haven't really raised it all that much. They haven't really started to absorb all that liquidity. So that money going someplace, maybe a lot of it is going to oil and other commodities, which is perhaps not causing the price rises, but certainly helping it along. And finally, in the past, when you had very high oil prices, there had been some cheating by OPEC members. So it wouldn't surprise me if later on we found that some of the OPEC members were producing extra amount over what they agreed on in OPEC to try to get some advantages from the current high prices.
Indeed. Well, finally, Professor, looking ahead this week, the Bank of Korea is holding its meeting this Thursday on monetary policy. They'll be deciding on interest rates, and with inflation running at 4%, a rate hike is definitely considered to be on the cards. What's on your radar in the week ahead, briefly?
Okay, well, Tuesday we have the liquidity report from Bank of Korea for February, and savings institution household lending report. On Thursday, we have export-import price indices, which will show how much of the export increases are due to volume and how much is due to price. And perhaps the second most important stat coming out this week, other than the interest rate, Wednesday we will have March employment report. And in the United States, we will have CPI, the Consumer Price Index, and Producers Price Index numbers coming out this week, retail sales as well. And on Sunday, we'll have the China GDP growth and industrial production numbers out. All that will be important to see how the global economy and inflation is going.
All right, we'll keep an eye on all of that with your help, Professor. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.